traditional private banks restrict what actually the clients can buy. They don't want to be restricted because if you are with an external asset manager, you want independence. They basically just need custody and execution.
How do you see then the balance between that independence, transparency and trust?
Trust will continue to be extremely important and it will be at the core. The whole relationship should be supported more and more by AI. Players which are not ready to really invest here will probably have it quite difficult going forward. We were actually the first Swiss bank to offer physical Bitcoin trading and custody in 2017. In 2021, around a third of our revenue came from digital assets. We have dedicated compliance officers. We may use technology and we might be faster, but we always follow the same rules.
Welcome to the Pulse Check podcast. I have Rafael Weber with me, Deputy CEO Singapore for Swissquote. Great to have you on board.
Thank you very much. Pleasure to be here.
Yeah, I'm here in Singapore. Both of us probably met the first time in Hong Kong, almost, I believe.
I think before you went to Hong Kong, actually.
Oh, even before.
Met in Singapore, but just before you moved to Hong Kong.
Yeah, exactly. So I lived more than 10 years ago in Singapore, and then we met and you did also some projects together, and it's been a while, but we've been in touch, of course, and I've always followed also your journey, which we will cover shortly. But before we go into your journey, let's start with an icebreaker maybe. What makes you, Rafael?
I mean, actually, before I started my journey in Singapore, I actually lived in China when I was 21 years old. And that was really, I think, a defining moment in my life. And without that time, I think I wouldn't have been where I'm here today, right? I think it taught me so much.
Yeah, absolutely. That's also one of the reasons I came to Asia. I wanted to actually go to China or Hong Kong. Synpulse didn't have an office back then in Hong Kong, so it took me a bit longer and helped to then open it. Yeah, and that's also where we had some of the projects together. So maybe you can share a quick rundown of where you're coming from and how you ended up at Swissquote.
Absolutely, thank you. Yeah, I mean, after my time in China, I actually went back to Switzerland and joined good old Swiss private banking, more on the investment side, built there an Asian fixed income fund, managed it, and also built the advisory process for the private bank. But I always wanted to move back to Asia. And then in 2015, I had the chance to become the chief investment officer of a private bank here in Singapore. And after that, I actually changed to the client side, right? I joined UBS and built up there the multi-family office desk here in Singapore. And then around 5 years ago, I was approached by Swissquote to build up here their business. And yeah, in the last 5 years, we were fortunate being supported by our clients to build up the Singapore franchise. And I would say making it one of the among top 10 custodians for external asset managers and family offices in Singapore.
Yeah, I followed your journey, and it's exciting to see external asset management, family office business, multifamily office business has been also where I've been involved 15 years ago. Knowing it from Switzerland and the UK, when you came to Asia, same as me, it was rather new and not as fast growing as it is today. And maybe that's also a first question, and also for our audience to better understand it in terms of that, call it platform business for EMs and MFOs and so on versus the traditional private bank. And maybe you can help put some light on it, and especially in a high-touch business, and also what it means to provide the platform for those office companies, basically.
I think in the past, obviously, private banks were the sole partner for an external asset manager because often they came out of a traditional private bank. Right? I mean, that's how it started. And as you said, like when I moved here, nobody understood what is an external asset manager almost here in Singapore, while today it's almost a buzzword. But I think how non-traditional private bank players like Swissquote came into play is that we were basically able to disintegrate the whole process, right? Like generally, most external asset managers, they don't need most of the services which a traditional private bank offers. They basically just need custody and execution. And a platform like Swissquote does that very efficiently. And then, of course, during the years since we're here and also before, compliance and so on has really increased. And if that is not managed efficiently, that really makes the onboarding extremely long and cumbersome, right? And of course, we all have to follow the same rules. But I think if technology and also an entrepreneurial spirit, of course, with lean structures is used, then that can still being made into a good experience for the client, right? Instead of a bad experience when being onboarded. So that is one part. Then it's the open architecture. So a lot of private banks traditional private banks restrict what actually the clients can buy. And in general, obviously, they don't want to be restricted because if you are with an external asset manager, you want independence, right? Not just buying the products of the bank. And like just the technology infrastructure by itself. I would say we are not that good, but I would just say a lot of the players, they have actually not built up their online capabilities to trade products online. And obviously that impacts the client experience, that impacts the price. Because if you need people to do that increases the price. And we saw that in particular during COVID, where maybe not all labor force was available to actually enter trade. So I think that really also played to our strength to have complete online order capabilities.
And you offer that for both Singapore and also Hong Kong and other markets in Asia?
We only have booking center in Singapore, but we work with clients generally around the world which want to book in Singapore, but majority of the clients are in Asia, in Hong Kong, of course, as well. Yeah.
I think what I've seen is that many private banks and custodian banks underestimate a bit the complexity of such family offices, of course, typically coming also from big, rich family offices that have, of course, a more complex setup and also global citizen setup. They want to be able to book in Singapore, Switzerland, and other places. And as I said, many of them are also quite sophisticated and understand also investments very well. I've seen in Hong Kong, they also have their brokerage arm through even Futu and interactive brokers and trade themselves. And then they have a platform such as yours. So tell me maybe why is it that also some of the custodian banks, private banks, did underestimate the complexity and also the ask and need of some of these bigger EMs?
I think some traditional private banks still rely fully on the client relationship and trust. And trust, of course, is extremely important, but I think it has to be continued to be earned and it cannot be the only element, right? The other service offerings also have to be there. And I think another aspect in that field, which I didn't mention, is also really passing off wealth to the next generation. So this is a continuous slow process, right? So it's not a big shift, but slowly. And the next generation really pays much more attention to not just having a long-term relationship with a private banker, but also somebody who can give transparency, trust, and really a service which they think is worth paying quite a bit of money.
So how do you see the balance between that in its independence, transparency, and trust, especially again in an increasingly complex, also cross-jurisdiction, cross-border structure, as here in Asia with Southeast Asia as well as in North Asia and Hong Kong, China, and so on? How do you see that, and how can a platform help in that regard?
I mean, trust will continue to be extremely important, right? And it will be at the core, right? And I mean, I think human trust will be even worth more because it's becoming more rare. But the whole relationship should be supported or will be supported more and more by AI, and not just empowering the bank itself, but also empowering the client, right? And adjust to changing conditions in their life, products needs, and so on. And then basically this complexity obviously is very difficult to be managed just with manual work, right? And that's why I think technology will play a more and more important role. And players which are not ready to really invest here or haven't invested, who are too far behind and maybe cannot pick up, right? Some players, I think they're well on track, but I think in particular smaller players which haven't invested yet, they will probably have it quite difficult going forward.
Yeah, before we go into the more forward-looking view on AI, other innovation topics, I mean, you need to get the basics right, and especially when it comes to platform. There is also an initiative that we launched a couple of years ago, 7-8 years ago in Switzerland, called Open Wealth, with the Open Wealth Association. And of course, I was very happy and proud to see that you're also an ambassador here in Asia for Open Wealth, to ensure that at least we can rely on stable data accuracy before we can even make it available to AI. Maybe your quick 2 cents on open wealth and why you think that could be important for the industry here.
In the past, I mean, let's say in Singapore and Hong Kong, I think we had a growth phase where it was just about growth and not so much about building the infrastructure behind. But I think that is now also consolidating, where the external asset managers, family offices realize that they have to build also the processes, in particular given, I mean, besides the aspect I mentioned with data usability by AI, but also cost. So if a multifamily office, external asset manager, also a larger single family office doesn't have like those interfaces and an efficient portfolio management system, it becomes very expensive to do that on a day-to-day basis with Excel and so on, right? So I think in principle, also in our company, we try to put every Excel into a system, right, which makes the data actually usable and, in the end, much more cost efficient for the firm and in the end also for the clients.
I know this question might be hard for you to answer now, given you've worked on all the different sides in big banks and smaller setups, but looking at this model with family office external asset managers, and as you said, it was quite new 10, 15 years ago in Asia, but and it was typically RMs that have worked in big banks, the big tier 1 banks that became independent. That's why it's sometimes also called independent asset managers. Do you think that this is really also the future to go, and especially also with platform efficiency and open wealth, open banking standards, that we will see this more and more, that there's smaller setups and the traditional banks become more of the platform providers?
I think if it's well organized and with the right tools, I absolutely believe that the independent wealth sector has a tremendous growth in front, in particular in Asia. Like, as you rightly said, custody and brokerage became more of a commodity, right? Which should be cost efficient and of course always safe. That is out of question. But so, and the trusted relationship is with the external asset manager in many cases, right? And as I mentioned also previously, the trust relationship will be even more important, in particular for very wealthy clients, because human interactions will become more rare in that sense, right? And it's probably difficult to differentiate what is real and what is not. So overall, if it's structured the right way, I think on the independent side, we probably still have a bit of way to go, because as you are aware, a lot of the businesses here are still built on retrocession. And I think over the long run, and to have true independence, that will probably change at some point. But I think some of the players which are at the forefront are already changing that. But of course, have to stay agile, and people want to do business. So many of them do the models in parallel at the moment.
Can we double click on that quickly, maybe also to make sure our audience understands the pricing model called out the retrocession, which is basically kind of the kickback for the platform provider. But what are more trending newer approaches? And I know in Switzerland, I think retrocession is since many years already a thing of the past, and here it's still used. Can you maybe also explain why people are moving away and what other options there are?
I mean, I think in Asia, the clients are still not really used to pay for the advice. And with the retrocession model, basically the client doesn't directly see what he or she is paying. So I think that is maybe also culturally to some extent, and also to the fact that a lot of the transactions are still advisory based and not discretionary based. But I mean, other models which are coming up or already of course existing is the management fee and even performance fee, right? Because if you have a retrocession model, you're basically incentivized to trade more, and you might not have the best interest of the client at hand. And potentially not independent. Coming back to that topic, right? So, I mean, with a mix of performance and management fee, you more institutionalize that business as well, right? Similar to a private equity fund or another fund managed by a professional asset manager. So I definitely think we will see more of that. And I mean, another reason is just that the regulation is different. So once the regulation is adjusting, where also here everything is transparent, similar to Switzerland, right? I mean, there you can still take retrocession, but you have to print the amount of retrocession at the statement, which had led to a drastic decrease, obviously. So then I think we will also see that shift. So I definitely foresee that happen in the next 5 to 10 years.
Yeah. I don't have the latest numbers at hand, but I remember in Switzerland, I think it's at least 20-30% of external asset management or asset under management with such external asset managers. Here in Asia, last time I checked, I think it was under 10%, maybe has increased. Do you have a view, and can you also maybe elaborate why it's still lagging behind so much and what needs to be done that it would catch up towards numbers like in Europe?
I mean, I think Synpulse has done tremendous work here to do some market studies. I think it's around 4 to 5%, if I'm not wrong, but I think we are waiting for the newest report to come off the print, and then I think we can hopefully confirm that number, but I think it's around there. And yeah, if you look in Switzerland, we're around 25 to 30%. So, I mean, it's obviously not overnight. And I mean, there are different aspects or important factors, right? I mean, in the end, you need an entrepreneurial mindset to be able to, or to be willing to join an external asset manager, right? And then, of course, you need an external asset manager, coming back to the earlier discussion, has to have an according infrastructure to be able to offer a better proposition to the client than the traditional private bank, right? I mean, it cannot just be pricing, because generally in pricing, in particular in this kind of business, you don't win, right? Or, I mean, that's not how you compete. So I think, but overall, I see that trend continuing, like where clients want to be less dependent on banks, and like also here mentioning again the next generation, right, which basically will critically review and often actually fire the asset manager of their parents or whoever they inherit the money from. So I think that will definitely also lead to a continued growth also on the independent side, because I think there is a value proposition for clients with appointing next independent asset manager.
Yeah, that report is about to come out very soon, as far as I know. Maybe when we launch the episode, it's already out with the latest numbers, and we do this then on a quarterly basis. So to really make sure we are up to date. Again, when I came to Singapore 13 years ago, we had the last report, and I remember it was 3-4%. So if it's now 4-5%, really there is not
already. Okay.
Yeah,
we have to check the numbers. Okay.
Exactly. Of course, it always depends a bit how it's reported, because again, there's big private banks, custodian banks that do not even have a separate EM desk. So sometimes it's just with the RMs, and it's even more difficult to actually measure.
I mean, if it's an advisory mandate, right, which is still actually quite common. So where the external asset manager doesn't have a limited power of attorney over the account, that might not be correctly captured in such reports.
Yeah, good point. So with this, I would love to go also a bit into the future, as we all hope there will be growth in the business. But overall, of course, that the experience for the end client is gaining, and we've elaborated on trust, on platform capabilities, standardization at the back end to really ensure data quality at the front. And with this, then also being prepared for Agentic AI. And without going now into a too technical conversation, I would still, of course, love to understand also from your view, from a platform provider, on how maybe already today Agentic AI is helping, and what you're also seeing the trend will be in the next, let's say, 3 to 5 years from now.
Yeah. I mean, in general, of course, we are not a traditional private bank, but at least in Switzerland, we're actually a universal bank where the clients are doing all kind of transactions with us. So there we also have 1 million retail clients. I mean, we're one of the top 10 banks in Switzerland. So whenever you have a large mass of similar clients, obviously there is the first point to use AI or Agentic AI. So we are already using that in our hotline. And I think we were able to reduce the calls more than 30% within a very short time period. So obviously that's extremely important because that's less costs for us, and we can also pass that to the client and stay more competitive, right? So it's kind of like a loop. And just in general, I mean, we are a tech company with several banking licenses in Switzerland and in Singapore. Not in Singapore, in Luxembourg, sorry. Yeah. Important, yeah. And basically, obviously, artificial intelligence is also at the forefront for us. And we are working on different projects internally. Of course, also, as mentioned, getting the data right to have the right input is very important. And we are also not perfect there, obviously, and working strongly on that side. I think we will use, or I think that AI will, not only enable Swissquote or the custodian to operate more efficient, to offer a more targeted offering, but also empower the client within the custody system to basically be more empowered and do even more things than they can do today.
It's quite interesting. You just triggered another question in me with, as you rightfully said, you also have retail clients in Switzerland. Yeah. Swissquote, of course, being big in Switzerland. And one thing we see in terms of innovation coming also from Switzerland to Asia is also in the area of digital assets. We just have seen quite strong progress also here in the region. In Hong Kong, there's been also the launch of stable coin custodian licenses with anchor point through Standard Chartered and also HSBC. And also here in Singapore, there's significant development. Digital assets, maybe. Didn't prepare you for this, but a big topic as well in family offices, because again, especially sophisticated clients, sometimes also from China, the mainland, have gained a lot of assets through Bitcoin and the like currencies. And this becomes now, of course, a sticky point when it comes to source of wealth collaboration for private banks, as well as family office, but also in terms of even traditional clients. They look into, should they diversify 5 to 10% into digital assets? And I'm sure you as a platform provider are being also triggered maybe to provide the custodian capabilities, probably not in regards to digital assets itself, or maybe even that?
Absolutely. I mean, we were actually the first Swiss bank to offer physical Bitcoin trading and custody in 2017.
Oh, wow. Okay. Already.
So we have every year a project, or somebody can bring up a project which should generate additional revenues of 10 million. And that was an idea in 2017, which was brought up by the team. Obviously, now it's far in excess of that. So thankfully, we were very diversified, as I mentioned, right? So, I mean, in 2021, around a third of our revenue as a group actually came from digital assets, right? From custody and brokerage. And then we went into the bear market. So that dropped quite significantly. But then we had other income streams from interest differential, like a traditional bank, right? And also brokerage and so on. So we actually ended up having a even higher year. So every year, independent of the market, we actually had new record years. So, but yeah, to answer your question, definitely we are at the forefront, not only on AI, but of course on the crypto side, which by the way, I believe both sides will converge more and more. And like when it comes to clients who actually made their wealth with digital assets, we can also accept them. We have dedicated compliance officers which can do chain analysis and so on to make sure, of course, as I mentioned at the beginning, we may use technology and we might be faster, but we always follow the same rules. And yeah, we have these in-house capabilities and understanding. And I think also clients who hold digital assets, they're more open to bank with us, right? And don't just follow a bank because the bank is 200 years old, right? So I think that is definitely a clientele we are eyeing and which is we've seen good growth. In Singapore, just as a disclaimer, in Singapore, we cannot custodize and brokerage or provide brokerage for digital assets yet, right? But as a group, yeah, we do that quite on a big scale. Yeah.
So you already almost answered my last question here then.
Sorry.
So, yeah, I mean, I still ask in terms of the role that the platform like Swissquote needs to play to make really that future we envisaged before in terms of AI, that it's both trusted to the end client, but also scalable. So maybe on the last element in terms of also scalability, so you brought in the innovation point. So how do you really prepare yourself also as an organization to really keep that trust with clients, but also be innovative at the forefront and stay ready to really scale towards more clients?
I mean, by providing or developing a lot of products which really help the client on their financial journey, right? And I mean, if you think about, we will not start hiring relationship manager advisors who basically will provide advice, right? That's not our business. But with AI or Agentic AI, we can definitely help the client to be financial independent and basically find the right investments for them, right? And empower them in general, right? Not just the bank itself.
Yeah, with this, thank you already for the conversation. Very interesting and definitely a topic that is also close to myself. Is there anything else you want to share, and where can people find you?
I'm always happy to have a conversation. You may contact me on my LinkedIn, on the Rafael Weber, at any time.
Thank you, Rafael. With this, you find us, of course, on the LinkedIn as well, but also YouTube, Spotify, social media platform on the Pulse Check Synpulse 8. And looking forward to have a next conversation in a couple of months and to see that report coming out so that we can rely on the latest numbers. Thank you, Rafael.
Thank you very much, Salomon.